Initiating the Vanguard Neural Intelligence Briefing. Our asset target today, Apple Incorporated, ticker AAPL. Look, this explainer is all about stripping away the everyday market noise to give you a purely clinical, data-driven analysis. Right now, we're examining this asset at a really critical juncture. We have to balance an absolute fortress of a balance sheet against some very real emerging technical exhaustion. Let's dive in.
First up, strategic diversification. We're seeing Apple secure a reported foundry agreement with Intel. Make no mistake, the whole architecture of the ecosystem is shifting right before our eyes. This is an aggressive maneuver to eliminate single points of failure in their hardware pipeline. By leveraging Intel, Apple is locking down its supply chain. It's a structural evolution completely designed to dominate the next decade of performance.
Section 1. Strategic growth and shifting architecture.
So the fundamental foundation here is rigid. We've got unquestionable institutional backing, really with Berkshire Hathaway cementing Apple as a core portfolio position via Greg Abel. On the regional front, they're not sitting still either. We're seeing proactive iPhone 17 price cuts in China, a highly calculated strike to defend market share in a fiercely competitive growth sector. And what's backing this entire strategy? A fortress balance sheet that generated a staggering $101.09 billion in trailing 12 months free cash flow. That is serious firepower.
To put that into perspective, this massive trailing 12 months net income of $122.58 billion is funding an aggressively accelerating R&D spend of $11.42 billion. And the prime target for all this capital deployment? The upcoming Worldwide Developers Conference. Apple isn't just updating software, they're building the infrastructure for personal AI across 2.5 billion active devices. The market is absolutely pricing in the expectation of a massive upgrade cycle here.
Section 2. Bullish technical architecture.
Looking at the chart, price action is decisively bullish right now. Current valuation is sitting right at 300.23. Smashing through that 300 psychological barrier is a huge deal. Retail sentiment is incredibly elevated, which firmly positions this asset as the apex performer among its mega-cap peers.
When we dig into the moving averages, we're seeing a perfect hierarchical alignment. The current price is sitting beautifully above the 10 EMA at 291.60, and that in turn rests solid above the 50 SMA down at 265.97. This structure confirms a really powerful uptrend across both the short and medium timeframes. The mathematical strength here, it's proven.
And the positive momentum just continues to accelerate. The MACD is positive, coming in at 9.52, with the histogram confirming that steady upward trajectory. At this precise moment, the technical architecture is showing absolutely zero immediate signs of a trend reversal.
But, momentum always has its parameters. The upper Bollinger Band is currently sitting up at 304.77. Pushing this aggressively toward a high resistance zone like that triggers a distinct mathematical warning. Trading near the upper band almost always precedes some form of consolidation or a mean reversion back toward the baseline.
Section 3. The structural support floor. Let's talk about the downside protection. The 200-day simple moving average sits down at 258.65. This is our absolute structural floor. Now, the incredibly wide gap between the current price and this level highlights just how extreme this recent rally has been, but it also perfectly measures the exact depth of a potential macro correction.
As our analysis always dictates, this is the line of demarcation. If the price stays above 258.65, the structural bull trend is totally intact. But a break below that signals a systemic collapse of the entire market thesis. It is literally the dividing line between standard volatility and total failure.
Section 4. Quantifying institutional risk.
Okay, the RSI has breached the critical 70 threshold and is currently sitting way up at 76.02. This is heavily overbought territory, folks. Sure, a powerful asset can sustain these elevated levels during a parabolic run, but a 76 is a glaring mathematical warning. Statistically speaking, relying on immediate, continued buying pressure here is simply unsustainable.
And that technical exhaustion is starting to compound with some actual fundamental cracks. Apple recently agreed to a $250 million settlement regarding some Apple Intelligence false advertising claims. Financially, that's a minor hit for them, but it's a major credibility fracture.
On top of that, you've got potential legal threats from OpenAI over weak ChatGPT user growth. Zooming out, the geopolitical friction of the US-China tech stalemate definitely persists, and rising global inflation threatens to drag down the consumer discretionary spending needed for those high-end hardware upgrades.
So we arrive at the ultimate calculated equilibrium dilemma. On one hand, you have an undeniable fundamental powerhouse, boasting a 141% return on equity and over $100 billion in free cash flow. But on the other hand, you're staring at immediate technical exhaustion with an RSI of 76, plus concerning legal friction in the exact AI sector the market is already priced for perfection. So what do we do? Buy the fortress or respect the overbought signal?
To manage this dilemma effectively, we have to establish a volatility baseline. The average true range is currently sitting at 6.24. We use this metric as the absolute anchor for our risk management protocol. It tells us exactly how much room the asset needs to breathe, so we're not getting faked out and triggering an exit on just random market noise.
Section 5. Vanguard Neural Final Verdict.
The final calculated directive is a solid hold. Look, at a valuation over 300, the risk-reward ratio for initiating brand new long positions is basically void. The market has already priced in a totally flawless execution of Apple's AI strategy, leaving zero margin for error. However, the underlying strength of that massive balance sheet totally negates any justification for a panic sell. We hold.
Now, for those of you actively navigating this asset, here's the precise architecture of the trade. Your target entry for swing positions is right on that 10 EMA support level at 291.60. If you're a current long-term holder, you want to institute a trailing stop loss near the 50 SMA at 266 even, just to protect your core gains against a mean reversion event, and for immediate, strict downside protection.
Your hard stop loss is exactly $287.70. We calculate that at 2 times the average true range below current levels. This is the precise threshold where short-term noise turns into structural breakdown. You need to sear this parameter into your strategy.
We're going to leave you with this final variable to consider. Does the upcoming June WWDC's personal AI catalyst possess enough kinetic energy to completely outweigh the sheer gravity of an overbought technical architecture? Think about it. The data is in place and the parameters are set. Vanguard Neural, intelligence refined.